Wednesday, October 26, 2016, Monaco 64, home of alternative economics and contrarian views. So this is more of an informational video, so to speak. It's about the dollar index. One of the my subscribers or viewers asked me, to explain about the dollar index, and I think is really interesting because I've had a further look into it, and I have to say those people who think the dollar index and gold are correlated are making a big mistake. But first of all, explaining what it is. Basically, just like we have the Dow Jones index of 30 biggest industrial companies in the US, or the S&P 500 index, we have the dollar index, which is basically an index of the major currencies in terms of the US dollar. And I read a little bit here on Wikipedia about the dollar index, and it says USDX, which is the ticker, or there's also DXY, there's two tickers for it. USDX started in March 1973, soon after the dismantling of the Bretton Woods system. Well, that makes sense because during Bretton Woods, currencies were fixed to the dollar, and dollar was fixed to gold, $35 per troy ounce. But with the closing of the gold window 2 years earlier, or in August of 1971 by Richard Nixon, by 1973, the fixed currency regime was just kaput, and it started floating. So it makes sense that they're now measuring the dollar against the other currencies because they're going to float quite dramatically. And by the way, the foreign exchange market since 1973 is mushroomed, because prior to that, currencies were very, they were fixed and stable. And it says here, at its start, the value of the US dollar index was 100. It has since traded as high as 164.72 in February of 1985 and as low as 70.698 on March 16th, 2008. And it's interesting because a lot of people, they look at the dollar index to see how gold's going to do, but, in March of 1973, when the dollar index started trading at 100, guess where the price of gold was? And I've got here the March 1st, 1973 AM fix in London. The price of gold was $86 per troy ounce. And right now, the dollar index is 98.56, and the price of gold, where are we? 1,268. So it just goes to show that trying to figure out what gold's going to do per the dollar index is kind of silly, in my opinion, because the dollar index is a measure of dollar in fiat currencies that are basically debasing just as quickly, or as the dollar, if not quicker than the dollar. So it's like comparing apples and oranges. So yeah, the dollar index is an index that shows how strong the dollar is. But if you try to say, oh, gold's is gonna weaken because the dollar index is at 100, well, it was at 86 when the dollar index was 100 in 1973, and now in 2016 we're near 100, and gold is at almost 1,300 basically. So that doesn't make sense to me. So the other thing about the dollar index that I think is a bit, it's not that they haven't really adjusted it, whoever runs the dollar index, is that the currencies in the dollar index, for example, there are 6, and the major weighting is the euro with 57.6%, the yen with 13.6%, the pound with 11.9%, Canadian dollar 9.1%, Swedish krona 4.2%, Swiss franc 3.6%. to me it seems strange, because if you could look at a list of the largest trading partners of the US, yes, the European Union is number one. Number two, though, is Canada. So why is the Canadian dollar like number 4 on the dollar index? Number 3 is China. Why isn't the Chinese currency, yuan or renminbi, in the dollar index? And Mexico is number 4 as trading partner. Why isn't the Mexican peso in the dollar index? Japan is only number 5. I guess it's on the dollar index. It's second in weighting, so that doesn't make much sense either. And the other one that's interesting is the pound sterling, which has the 3rd biggest weighting in the dollar index, but it's only like the 8th biggest trading partner with the US, or 7th biggest trading partner with the US. So that's what I wanted to say. You know, it's an interesting index, but it's not really something that people should really count on 100% to give you an idea of how things are in terms of currencies and the dollar. I think looking at gold is the ultimate sign of health of the US currency. So just to finish off, I'll show you a chart of the dollar index. I guess they backdated it to 1967 on this chart, even though it started at 100 in 1973. It's been very volatile over the last 45 years with the floating exchange rate system. The trend, though, as you can see, has been of lower highs and lower lows. So the trend is negative for the dollar index. So right now I think we touched 100 a couple of times last year. This year we haven't reached 100 yet. But yeah, that's the dollar index. One thing that could be interesting, I just thought about it, and I'd like to thank Jeff, actually, the viewer who asked me to do this video, because looking at the dollar index and seeing that it started at 100 in 1973, it's interesting that we're now at 100 almost for all practical purposes. Could it be that we're going to see some kind of rebalancing of the monetary system, and one way to do that is to go back to par? That's how these people work. They just go by the numbers. It would be very interesting to see what happens in the next few months, next 18 months. There's talk of a new global currency or a reset. And I know I spoke about October 2nd, and that's when the pound started devaluing a lot more than it had up to then. Now we have November 8th in the US, which is the election. It's all very interesting that we're back right where we started in terms of the dollar index. The same level basically we were 43 years ago when they started measuring the dollar index, which is basically 100. So that's it for the dollar index. I'd also like to thank all the viewers who've been donating to my channel. I appreciate it. And yeah, so that's it for now. That was the dollar index. If you like this video, please give me a thumbs up, share it far and wide. And if you haven't subscribed to my channel yet, please do. And if you'd like to donate, there's some links below in the description. Take care. Bye.